also joins us on the show now. Sandeep, a lot of numbers came over the weekend, but let's start with the banking majors, Kotak, HDFC, there was even Yes Bank, RBL Bank, etc. What caught your attention and what's the view on the banking names now?
Results of the smaller banks and larger banks were somewhat disparate, like Yes Bank and RBL Bank coming back from higher NPAs, lower margins actually gave better performance. Whereas the larger banks actually the results were muted. HDFC Bank's operation seems to have stabilized in terms of the net interest margins, but then their guidance for growth seems to be muted because as they adjust the deposit growth to the advances growth. Similarly, Kotak Bank, the margin squeeze was more than expected, and the RBI restrictions still remain. So I think the one key thing out there is the strong performance of its subsidiaries, which adds significant value to Kotak Bank stock price. So the key will be the resolution of the issues pointed out by RBI, and I think once that happens, that will be sentimentally positive. So that's how it's placed. Overall, earnings season is turning out to be muted in general.
Because the commentary on the one hand, RBI saying it appears to be pretty, making him uncomfortable. The speed at which deposits are actually going toward mutual funds, and SEBI chief is saying that a lot of savings are actually going towards speculative activities. So, is it like kind of making a base for some action in budget on this side of the market?
So on the speculative taxation, it's possible that to make it unattractive, that's possible. On the interest on deposit side, also it's possible that there's some relief coming for savers. Both these possibilities exist. However, I think from the RBI's perspective, I think one of the reasons why deposit growth is lagging behind is they themselves are keeping liquidity so tight, and to that extent, there's a scramble for deposits because of their apparent fight on inflation, which is largely food led, which that's a separate topic of discussion whether food inflation can be controlled by monetary policy. However, that's their stance and it's unlikely to change in the near term. So the deposit struggle will remain for banks.
And since you're talking Indian hotels as well as PVR, would you call this a bit of a slowdown coming in urban discretionary spends and maybe that they have peaked out, or is it just a quarterly phenomenon with the seasonality kicking in?
I think Indian hotels management, the results are expected to be muted, and the management has come out with their statements also given saying that they expect the full year to be good. So I would think that this is a stock which still has 3-4 years to go as a story, and it's an extremely well managed company. And to that extent, any weakness, if it comes because of the overall market and results, should be a buying opportunity. And PVR Inox, I think everyone knew that all movies did not do well this in the first quarter. There were hardly any releases in April and May, and it's all a function of ticketing revenues and the related. So half the revenues are ticketing, half the revenues are from F&B, convenience fees, advertisement, etc. So as if the content is good, they'll do well. So I think starting this quarter, it should be much better. So it's a stock I think on a contrarian basis, I would be looking to buy on declines rather than think that it's somewhere at a level where it can fall drastically.
Right. All right, let's take a short break on that note. Nippon Asset Management results came out, very strong numbers. Where do you stand on, some of these wealth management companies versus asset management? I mean, you understand that business so well, but if one was to take a call on a longer term, which side would actually be better?
Yeah, asset managers are always better positioned than wealth managers because although wealth managers also have a sort of annuity in terms of retention of clients, but then clients can easily leave them. But in case of asset managers, the money remains very sticky. So unless and until the performance becomes extremely drastically bad, most of the people just stick on with asset management. So it's a brilliant operating leverage business. The only threat could be that after the sharp run up we've seen in most of the AMC stocks, in case market performance moderates or the flows moderate, so I think that could impact the performance. But longer term, I think the bigger players in the asset management company business should continue to hold most of the market share.
Kunal, just last week we were discussing IT, right? A lot of these data centers and large ones at that. Today it's Google. Tomorrow it could very well be some other, big IT giant. And this would give a further push to some of these realty plays.
More than reality plays, Aisha, I think the companies who are setting up these data centers, they will gain more business. So what we've seen is many companies have made a foray into setting up data centers. I've seen that a few of these transmission tower companies like KEC, Kalpataru, I think they have been winning orders on the data center side. I think it's important to look at the companies who will be setting up these data centers, because they'll be setting up data centers mostly for uh, the larger companies, and some of them will be unlisted. So I think direct data center plays might be tough, but companies who set up these data centers, they could have great opportunity.
Have exposure, Sandeep, to any of these names, KC or Kalpatru?
So these stocks, I think we are holding for a very long time, and not for this business actually, but more on the transmission side, because there also the business momentum from both domestic and overseas is pretty strong.
Talking of transmission for a moment, the way commentary from TRIL coming in, Sandeep, I want to talk about export opportunities. Now they're talking about 25% export. This entire transmission and transformer space also seem to be having a big option on the export side, especially with Trump coming in and talking about reindustrialization there. Do you think these guys, even though they have moved higher, but may have some more leg up in the next 1 or 2 years from here on?
See, Ajay, the business opportunity is huge, because with the renewable energy focus, the investment required on transmission as well as transformers is much greater than was there in traditional thermal or hydro. And given the growth of AI and the power consumption required for that, the investments on the entire chain, generation, transmission, transformers, and other related sector is going to be big. Now, obviously, specific stocks we have to buy looking at valuation, but purely in terms of an opportunity, I agree it's a big opportunity.
Bunch of other buzzers, in trade.
If you like this video, then like, share and subscribe to ET Now.